Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar was somewhat stable at the beginning of the session, however momentum picked up following the latest update from the Australian Bureau of Statistics, or the ABS, after the monthly CPI, or the Consumer Price Index, increased by 4% in the 12 months leading up to May 2024, with the previous release in April at 3.6%. Meanwhile, investors will be looking for the GDP out of the US, and with the key event looking to the personal consumption expenditure, or the PCE, on Friday, which is the Fed's preferred inflation measure. Minimal monthly increases in the PCE could prompt consideration for the interest rate in the US to shift from September and maybe even look to July. While turning to the technicals, the Australian dollar is holding steady to its objective of 67 cents. Reassess around 67 to around 67.5 in case we see profit taking, as this level has failed many times. Any pullback should find support and still view the base around 65.70.80, along with that with the 60-day moving average seen around 65.88. The euro was somewhat weak considering the US dollar index, which measures the greenback strength against a basket of 6 major currencies, was flat at the New York close at 105.55. Looking forward though, with the bullish divergence recently, no doubt the euro will look further to the upside and look towards its objective of 108.30.40 and reassess from there, while any pullback still view the base around 106.70.75 as a potential demand zone. Turning to dollar yen, the market is not backing down and still remains persistent in taking the challenge to the 160 zone, following the hanging man Japanese candlestick, which is bearish, failed to initiate any downward move. Traders should pay attention towards the top side as we are approaching the zone area where the Bank of Japan potentially intervened, and if so, could see another whipsaw candle like previously here back in April, where the market plummeted from 160 down to 154, 600 points. So therefore, another rejection could easily see the uptrend around 156.90 challenged. Looking ahead to sterling, the market is somewhat bullish since the rebound of 126.40, and I still like the way this pattern's forming and therefore should see further gains and look towards the topside area of 127.30 to 127.90. As previously stated, any pullback should find support around 126.40. Turning to spot gold, we can see the market has resumed to a bearish bias after the recent engulfing candle and therefore could see further down challenges. But we do need to see the confirmation of this engulfing candle, or bearish outside range day, and that is a break of 2,305. This would initiate further weakness, and with the target below still waiting to be challenged around 2,250.70 area before a bounce. However, it should be noted that a rejection from 2,305 could see a correction back towards the region of 2,330 or on towards 2,346 to 48. Wrapping up with oil, the market erases the recent gains from Tuesday and now holds to a slightly weaker stance and therefore could see further challenges, and a break of 79.70 would increase the bearishness and confirm the engulfing candle to a potential target of $76 a barrel. Any upside attempts still views the region around 81 to 82 as a cap. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.